If by the end of this video you don't have a holy hatred for car dealerships and all that they stand for, then I have failed my God-given mission. The truth is, the business of the new car dealership is quite complex, with a long storied history of absolute scamminess and legal loopholes. This problem is not a new thing, and though the modern world is such that cars could pretty easily be sold direct to consumers, there's much more to the story than just a simple switch to that. But would it be possible for car dealerships to have their scumbag techniques regulated, or better, can we just get rid of them altogether? And could the American car dealership as we know it be heading toward a cliff? Let's find out. But before we go any further, I want to tell you guys about today's sponsor, which is Upside. Fall is here, and between school runs, football games, and road trips, filling up the tank adds up fast. But with the Upside app, you can earn real cash back every time you get gas, grab a bite, or stock up on essentials. Upside works at over 100,000 gas stations, grocery stores, and restaurants, and it's not points or credits, it's actual cash that you can transfer to your bank. It is so easy. Top Upside earners are making as much as $300 a month. I've been using it whenever I fill up, and it's awesome seeing real money come back into my account after I drive. To see how much you could earn, just click the link in my description to download Upside and use code BART to get an extra 25 cents back for every gallon on your first tank of gas, or scan the QR code on screen to claim this offer. Big thanks to Upside, and let's jump into the video. The story of car dealerships begins with a practical challenge: how to get early automobiles into the hands of buyers. In the late 19th century, cars were really just novelties, complex machines that few understood, but as the product and also demand grew, automakers needed an efficient way to sell, educate, and service these really revolutionary vehicles. Enter the first car dealerships. One of the earliest recorded dealerships was founded in 1898 by William E. Metzger in Detroit, Michigan. Initially, Metzger sold electric automobiles and later transitioned to gasoline-powered vehicles, making him one of the earliest gas-powered car salesmen in the U.S. Around the same era, Fred Kohler opened a dealership in Reading, Pennsylvania, selling cars manufactured in Cleveland, widely considered the first business solely dedicated to automobiles, rather than horse-drawn carriages. These early dealers served a crucial role. They educated early customers, handling everything from test drives and demonstrations to basic maintenance. As car ownership grew in the early 20th century, dealerships became more than just middlemen. They evolved into critical local distribution points, marketing outlets, and after-sales service providers. With limited road infrastructure, dealerships often relied on rail for vehicle delivery. They provided storage showrooms, parts, and they also serviced cars locally. Dealerships also helped demystify automobiles for the public who were largely unfamiliar with the internal combustion technology. They hosted vehicle demos, they provided education, and they helped buyers navigate warranties and repairs. These were all functions that became really vital as cars became mainstream. Now, as the industry grew, the franchise model really became the norm. Under this system, independent dealership owners received exclusive rights to represent specific manufacturers, and this structure really standardized the car buying experience across regions. It also empowered dealerships politically. In 1917, the National Automobile Dealers Association was founded to give dealers a collective voice in Washington, a platform where they could prove instrumental in shaping industry regulations and ensuring dealership viability. Now, it might be easy to assume that dealers from the early days were just these pure, unadulterated businesses ran by men who were simply excited to be a part of this new thing. Yeah, that was not the case. From the very beginning of the automotive age, dealerships had a trust problem. In the early 1900s, when cars were still considered a luxury, dealerships operated more like horse traders than professional retailers. The market for used cars especially became notorious. Dealers would buy broken down or heavily used vehicles, clean them up cosmetically, and sell them as good as new, just like today. Odometer tampering, even in its primitive mechanical form, was one of the earliest tricks of the trade. This was a massive, widespread problem among dealerships, and it really helped to cement the notion of the scummy car salesman. As car ownership exploded in the 1920s and installment financing became common, dealers quickly discovered a new brilliant avenue for profit, namely manipulating loans. Unsophisticated buyers often didn't understand interest rates or loan structures, and some dealers inflated repayment schedules or slipped in hidden finance charges, just like today. Even in the Great Depression, when sales collapsed, shady practices kept going. Add-ons such as unnecessary insurance or accessories padded dealer profits, much like extended warranties do today. A massive FTC report from 1939 on the motor vehicle industry, which was issued to Congress, found that 60% of retail sales for car dealerships were on installment plans. It details dealer packs, that is extra undisclosed add-ons to finance charges. Finance companies were providing multiple rate charts so dealers could quote a higher customer rate while selling the paper at the lower rate. And insurance commissions could be as much as 50% of the premium. The same 1939 FTC report shows that the average net operating profit per car came almost entirely from parts, accessories, supplies, and service, but it was really these add-ons rather than the car itself that were making dealers money. And this report, it didn't directly outlaw the practices that it uncovered, but it provided the first really authoritative documentation showing that dealerships were systematically deceiving buyers through finance packs, add-ons, and also insurance markups. As dealerships were the standard by the Second World War, post-war prosperity put millions of Americans behind the wheel, and dealerships leaned heavily on aggressive advertising. The bait and switch became infamous during this period. A dealer would advertise a car at an impossibly low price, only to claim that it had just been sold when the customer arrived, then push higher margin vehicles instead. This was such a widespread practice that by the 1950s, it had become really a running joke in American culture. But what could buyers do? This was the system. After years of mounting complaints, Congress passed the Motor Vehicle Information and Cost Savings Act of 1972, better known as the Federal Odometer Act, which made it a federal crime to roll back or tamper with odometers. Now, it might seem like this was just one problem being addressed, but it was no small step. Odometer fraud was so rampant, states joined in with their own odometer disclosure laws, and prosecutions became more common. Also in 1985, the Federal Trade Commission introduced the used car rule, which required dealers to display the now familiar buyer's guide window sticker on every used car. This disclosure had to state whether the car came with a warranty, and if so, exactly what it covered. The rule was designed to stop dealers from misleading customers with these vague promises of guarantees or from selling cars as is without the buyer actually realizing it. But regulations didn't end shady behavior, it just changed how they did their business. Dealers became more sophisticated, especially with financing manipulation. One notorious tactic was payment packing, inflating a customer's quoted monthly payment by slipping in extras like extended warranties, credit insurance, service contracts. Customers focused on the monthly figure rather than the fine print, and they had no idea really what they were paying for. By the end of the 80s, dealerships had earned a reputation for being both better regulated but also more cunning. The outright fraud wasn't so obvious anymore. Things like odometer rollbacks, that wasn't where it was at. It was in the confusing finance terms, the hidden insurance commissions, and manipulative loan structures that kept us customers paying more than we realized. By the late 20th century, car sales profits were shrinking, but financing and add-ons became really gold mines. Dealers discovered that they could mark up interest rates on loans arranged through banks and then pocket the difference. Extended warranties, rust proofing, undercoating, dealer prep fees. These practices were technically legal, but they're deceptive. Consumers found themselves paying way more than the sticker price, which I'm sure if you've ever bought a new car, you can relate to that. And there were loads of lawsuits during this time that really showed that this was happening. Now, in the 21st century, as the internet took over, potential car buyers were able to easily see the true price of cars thanks to sites like Edmunds and TrueCar, but dealerships adapted. Things like market adjustment fees, which were basically arbitrary dealer markups. These things became the norm. Also, junk fees, surprise charges, things like vehicle prep or VIN etching or nitrogen-filled tires. My brother worked at a dealership for a while, and though this is in the service department, it's just a picture of how dealerships operate. Advisors would tell people that, your lug nuts are stripped, and they would show you a rounded lug nut that wasn't yours. And so you'd buy new lug nuts at, $20, $40 a pop. We don't even fully understand just how scummy these places are. Like Thomas Siebler points out in his video, they just charge you crazy extra amounts to do things like a lift and new tires on a Jeep, let's say. And then when you bring that exact Jeep for trade-in, it's worth less because of those customizations, and then they put it out on the lot and sell it for more. It's just so crazy. There have even been investigations showing that minority customers were being steered into higher interest loans. The FTC has stepped in more aggressively in recent years, suing groups like Napleton Automotive for sneaking in illegal fees and settlements with others for deceptive finance practices, but still, misleading financing, hidden add-ons, these are all still the most common complaints for dealerships. Oh, but every dealership seems to have like a 4.7 on Google with thousands of reviews. Yeah, I'm pretty sure they're buying reviews. It's so obvious. The last time we purchased from a dealer, and I do mean last, like never again, we got our 2011 Honda Odyssey from an Acura dealer. It was the typical dealership experience. They're nice to you, they give you a test drive, and then they turn into absolute jerks as you move through the process, especially when you run the numbers. And of course, the end price is like 30% more than you think it's going to be. Gap coverage, extended warranties, service contracts. I actually opted out for all of them in this case, but then they gave me the supposed employee rate for the service contracts, and I just gave in. It actually ended up saving me down the road with them, but it was sold to me as basically this thing where I as a purchaser have no protection with that used car. Like if it broke down 2 days after I bought it, I would be screwed. But interestingly enough, the service contract that I got and ended up using didn't go into effect until 30 days after the purchase. So I was being sold something that didn't solve the supposed problem. Then once it came time for the car to get struts, which is what it needed like 5 months later, that warranty didn't cover it because Honda and Acura call struts different things. Struts versus shock absorbers. One you have to put together at the dealership, the other just comes put together. And they were going to try to use that to make it so that they wouldn't cover this, and I just freaked out and made them cover it anyways. The truth is, car dealerships don't make their money on cars. They make their money at the service center where they tear your intake boot and charge you $200 to fix it. They make their money in the finance area where they convince you that you need gap coverage and all this crap. And it's been this way for a very long time. It's the same old tricks. From odometer rollbacks in the 1910s, bait and switch ads in the 50s, and financing games today. It's been the story of the dealership for over a century. While regulations and consumer protections have fixed some of these problems, the basic dynamic of the car dealership business is the same. Dealerships operate in these high-pressure, commission-driven environments where profit just comes at the buyer's expense, and so the scammy car salesman stereotype is still alive and well. One of the biggest obstacles to moving beyond the traditional dealership model is the service question. Modern cars are increasingly packed with sensors and computers, proprietary software that requires specialized tools. Unlike older vehicles, which could be serviced by pretty much any independent garage, new vehicles function in these effectively locked ecosystems, and dealers know this, and it's why service departments have become really their biggest profit center. So for consumers, it means that we're stuck with that if we buy a new car. We just consistently get funneled back into the dealer network, even for little repairs. I think this would be pretty simple to fix if we got rid of the dealership. We could just have, car companies have their own service centers and that's it. But the service centers are just as horrible and corrupt as the dealership side. So I think it all needs to go. But could we imagine a future without dealerships at all? Direct to consumer models, online purchasing platforms, mobile servicing, a lot of these things already exist. Digital retail has changed nearly every other industry, so why not cars? Well, the real barrier isn't technological, but legal. State franchise laws really protect dealerships and they keep automakers from being able to sell directly. But for those of us who don't have disposable income, we're sick of it. We're sick of high pressure sales. Like, why can't I go in and look at a new car the way that I can a new watch, for example, without being pressured into buying it? I do think the cracks in the dealership model are starting to appear. The possibility of a dealership-free future is no longer unthinkable. Tesla, for example, is the most prominent proof of concept for life without dealerships. Instead of selling through franchise, Tesla operates company-owned stores and showrooms that allow customers to order directly from the manufacturer, often online. Pricing is transparent, there's no haggling, no market adjustment fees. Service is handled through Tesla-owned centers or mobile technicians who just come directly to the customer. This system really eliminates much of that hostile experience that many people associate with buying a car. And I'm not saying that Tesla have a perfect system. I just do think that they've shown that an alternate option can work. It also aligns better with what people want. People want transparency and also convenience. The real question is whether legacy automakers could adopt something similar to Tesla's model. For brands like Ford, GM, Toyota, the dealership network is just so deeply entrenched in their businesses, and it's supported by dealers who've invested millions in their franchises. Shifting to a direct sales model would mean dismantling really decades of infrastructure, and there would be so many lawsuits if they did try to get rid of these systems. Now, companies like Ford have experimented with online orders for certain EVs, and some automakers are pressing for like a hybrid system where customers can order directly, but they still pick up through a dealer. I don't know, I just think the dealership model could still exist. It could make sense for luxury and unique brands, but again, I would rather them function more like watch dealers, for example. I just don't see why a Honda Accord can't ship directly to me. It just seems silly. The only way things will change for the long run is if we just stop buying these stupid new cars. And we have to teach the next generation the truth about cars, that buying and owning used is the way to own a car, and that cars will always be a headache on some level. So why not pick the cheaper headache? That new car is going to be used in a short amount of time anyways. Don't buy new, do not buy on credit, and don't lease. Used cars, especially ones that are 5 or 6 years old, are such a better value and often more reliable. Most of the depreciation has already happened. They still have years and years of reliable service. Just as important is understanding the long game too. A car is not a disposable thing. Routine maintenance is the key to longevity. Oil changes, brakes, tires, timing belts. These things don't feel glamorous, but they do prevent breakdowns and they extend the life of the vehicle. And even when a repair seems expensive, fixing a car you already own is almost always cheaper than replacing it with a new one or with another beater. I think we need to take ownership of our stuff and view these things as lifetime things, whether it's cars, your house, learning to fix your own house, for example, taking care of your own yard, teaching your kids how to service their bicycle and service the lawnmower. I think so many people are just uneducated, but I do feel like it's shifting. Car dealerships have lots full of overpriced junk. Once we realize this whole system is a scam, then and only then will we potentially see the death of the American car dealership. All right, guys, I'd love to hear your thoughts in the comments below. We'll see you guys in the next one. Drive safe.